Now, in this next session, I'm going to get into one of my favorite patterns, particularly when we're in a bullish market. It's called the cup and handle. The cup and handle is a pattern where pressure gets built to the upside. And when that pressure finally gets released and a breakout happens, you can see some phenomenal things take place. So check these out. Now, this is one of my favorite patterns. There's two of them, this one, the bull flag, and then another one, which is called a cup and handle. So looking at this one, I want to walk through the psychology behind it. It's a pretty successful pattern. When it breaks out pretty well in most cases. So the psychology here is you have a big run usually, then you get a sell-off, then you get a run that goes right back to that same point where people start selling again. And then it sells off, but it doesn't sell off as far. And then it rallies back again, gets right back up to that point. So you can see it's definitely forming what I would call a wedge pattern here. So the psychology is that it's been a strong stock, so every time it dips, people are saying, ooh, I want in on that. And each time they're wanting in on that, they're willing to raise their price point a little bit. So what happens in these breakouts? Now, I do know what happened here with G specifically. It broke higher, and then it's continuing to move higher. It's not setting the world on fire, but it's continuing to move higher. It's doing pretty good today. So after that breakout, it's making a pretty significant move. So we come back, I want to look at gold. Now, I made this call on my YouTube channel, which I had at the start of this show. On my YouTube channel, I put out this potential trade right here on gold saying it's forming a wedge pattern and it's pulling back, and I don't expect it to break the bottom of this pattern, and I want to be a buyer here. So on this day here, I said, if we get down to here, I'm going to be buying gold, or in my case, I bought options. Then it came back to the top and it broke out. Now let's take a look at where that's at today. And gold just has continued to run higher. It's pulled off a little bit here today, but again, nice move off of that. And a great reward to risk ratio, because at the time I would have bought it down in here, my risk was 50 cents. If it breaks the bottom of that pattern, I'm out. And since that buy, it's gone from 305 up to 335. Very nice reward to risk ratio. And had I had a specific trading plan of, I'm going to get out when it gets to the top of this, I would have sold the bulk of my position there. But in this particular pattern, I will always hang on to some of my position, because this is a really powerful pattern. When it does break out, it tends to break out pretty nicely. And then Qualcomm, another one. And again, I don't know where this is at today. I put this pattern together a couple days ago, and Qualcomm is breaking out right now. Another thing to note here when it's breaking out is it is breaking out, and volume, those up days are more volume. So when the buyers are coming in, they're coming in with more force. Okay, there's more of them. So that also helps accentuate my opinion that this is a breakout. And if I were to be looking at a potential sell point, it would probably be up around that 176 range, would be a likely point for me to consider thinning out a portion of my position. Then Uber was another one. And again, I don't know where Uber is right now. We'll see. Okay, so Uber was I don't know if I'd call it a failed breakout, but it did break out. But look at the size of that red bar that came in. There was lots of selling that took place on that day for some reason, but it drove it back down largely almost to the bottom of that trend line. Had I been watching this, had I been looking at this, I may not have gotten into this because it didn't actually get quite that low, but I would have been watching for it to come down to that trend line and potentially get into a position there. So this breakout did fail here. But again, if I've got a tight stop on things, it really doesn't matter. So that is the bull flag. Then we have a bear flag. Again, just the reverse, the exact same concept in reverse. Every time it drops down to a certain point and then it rallies, but the rally isn't as strong each successive time. the sellers come in and take over. And then I'll look at SFM here, which is Sprouts Farmers Market. So we had that pattern. It broke down, but let's take a look here at our current chart. So here's what's interesting on this one. As a trader, I'm now looking at this and look at where I'm at on this chart. Okay. I am at a point where, wow, that might make some sense to, again, for me to do an options play of some type on this. I could do one of two things. I could sell a put spread thinking it's not going to go lower and I can make money if it doesn't go lower, or I could buy a long call looking for it to go higher, or I just buy shares of stock. So this is something right now that with a 3-to-1 reward to risk ratio, my reward on this, if this rallies back up, I would expect it probably to rally back up into that 155 range or so. And my risk, I'd have to come in here and define a point as to where I would go ahead and take my stop on that. And I haven't analyzed that in detail at this point, but I would certainly be looking at this as a potential candidate to consider getting long here at this point. Come back to the patterns and a couple more patterns. So this is, again, I think I'd mentioned one of my favorite patterns called a cup and handle, and not quite sure why my drawing tool keeps turning off, but this is considered the cup. And you got to use your imagination here. These aren't all perfect, but we can see that the bottom line is there was a pullback and then a little bit of stabilization and then a rally. And to me, the key factor here is this little bit of chop sideways. This is called the handle. This thing chopped sideways for a few days. Then when it finally broke out, to new highs, this thing screamed, okay? And this is a pretty good pattern to have that happen. So this is JBO when I did this a week or two ago. I don't know where it's at right now. Again, it probably is just chopped side. Yeah. So it's largely just chopped sideways up here again. So no big deal on that one way or the other. That breakout is a powerful breakout. Now this one, FHI, very similar thing. This is one that I did catch. I did play it. That whole cup there, which again, this whole thing I would call a cup. Then this is the handle, chopped sideways. And when it broke out above that point, that would have been a perfect point to consider going long with a tight stop. And it's rallied up here and now it's chopping sideways. So now I'll cut chopping sideways. So as a trader, I'm now looking at this and saying, is there something here? Every time it gets down to 51.80, buyers have come in. Every time it gets up to 54.50, sellers have come in. Is there something tradable there? As an options trader, I'm going to trade an iron condor on this, okay? I'm going to sell a call spread above it, put spread below it. I'm going to count on staying in that channel for a little while. If it wanders out, I'll take a small stop and move on. So I hope you liked this last session on the cup and handle pattern. In our final chart pattern session, I'm going to be looking at what I'll call trend changes or reversals, basically where support might become resistance or resistance in something might become support. So I'll look forward to seeing you there.